welcome back. Today I'm going to read about top 5 trends in insurance industry. The global insurance market is experiencing a transformation to digital first business models that can unlock new value worth billions of dollars. With an increasing focus on personalized, premium, and usage based coverage, insurers are leveraging Internet of Things, advanced analytics, and machines learning to develop more granular individual risk profiles. Collaboration between traditional insurers and insurtech firms will give rise to newer model and revenue streams, higher profitability, and reduce operational costs. The $5 trillion global insurance market is the midst of game-changing course correction that will redefine business as usual. A digital-first urgency is sweeping across the landscape, driven by a new generation of consumers, data, automations, and artificial intelligence or AI. Let's take a look at the top trends that are shaping the insurance industry and how digital technologies are driving irreversible change. First, new models, personalized product. The digital economy will make use based on demand and all-in-one insurance lifestyle product more relevant. Today, more than 80% of the premium collected by insurers is lost to distribution costs. Digital models will make intermediaries in their insurance value chain marked by their excessive dependence on human effort obsolete. And then two, AI and automation for faster claims, robotic process automation, and AI will occupy center stage in insurance driven by newer data channels, better data processing capabilities, and advance in AI algorithm. For example, insurtech company Lemonade Business Model deploys AI and behavioral economics as its core element. AI and automation will profoundly impact and improve business outcomes in customer experience, cost optimizations, personal operational efficiencies, market competitiveness, and newer business models. Third is advanced analytic and proactiveness. Premium will become highly personalized, enabled by new sources of tech-enabled data such as Internet of Things, mobile-enabled insurtech apps will wearables. With the connected devices market poised to grow strongly in the next 5 years, property and casualty insurer will be able to extract real-time and accurate data on the loss exposure of individual consumers. Drone and imaging technology will increasingly enable insurers to obtain high-definition image for remote and accurate property estimation and analysis. Additionally, insight will be built through dataset relationship to create deeper granularity in individual risk profile and protect insurer from emerging risk exposure. And then for insurtech partnership, insurtech firms have been showing significant growth in the areas of auto, home ownership, and cyber insurance. Such strong growth will stimulate traditional insurers to either acquire technology capabilities or partner with insurtech companies. With an increasing demand for innovative products and services from millennials, such collaborations will become a critical imperative. Overall, it will be a win-win situation. Traditional insurers will benefit from faster results in establishing a tech culture, and insurtech companies will get access to larger customer base, funding, and domain expertise. And then 5, mainstreaming blockchain. The need of huge volumes of customer data be processed in real time by different insurance functions calls for easy and secure transfer of data across organizations and their diverse stakeholders. Blockchain technology provides the advantage of secure data management across multiple interfaces and stakeholders with loss of integrity, from identity management underwriting to claims processing. Interestingly, more than 38 insurance and reinsurance companies have embarked on initiative called the P3A to explore blockchain application in insurance. The beta version of a blockchain-based insurance solution is expected to be deployed in 2018. The above trend indicates that new value worth billions of dollars can be created for the insurance industry. The key is to understand how and when to tap into this potential, leveraging in existing and new technologies.